The next thing that we're going to look at is going to be the benefit period for a disability insurance policy. We'll work on a continuum here, starting with the event that causes the disability. So we have our disability arise. This person becomes disabled. Most disability policies are not going to start paying benefits right away. Instead, what will happen is we're going to say, insured, you're going to have to wait a period of time. We call that, somewhat intuitively, the waiting period or the elimination period. And we can see a variety of different waiting periods or elimination periods. It's a pricey option, but you could have a 0-day elimination period. It's still fairly expensive. You could have an elimination period as long as 30 days. What you'll most often find in the industry today is 90 or 120-day elimination periods. Although we do see some people gravitating towards these 30-day elimination periods. There are some circumstances that can arise when we're purchasing this policy to supplement a group plan, for example, where you might have a waiting period as long as 2 years. We would typically only do that to fill a very specific need. Once the elimination period has passed, and you have a disability that meets the definition of disability in your policy, be it ONOC, regular OC, NEOC, or total, residual, partial, presumptive. Now, we start onto the claim. Let's assume that this person starts with a total disability, which is how most disabilities will start. So this person is totally disabled. Now, they can receive disability benefits for the duration of the benefit period outlined in their policy, as long as they stay disabled for that time. Once they're able to go back to work, they no longer need disability benefits. So they would collect disability benefits up to the benefit period outlined in their policy, BP or benefit period. And benefit periods for individual disability insurance might be 2 years. We might have 5 years. Age 65 is a fairly expensive option, but fairly commonly used. You'll even find some policies that give the opportunity to acquire a lifetime benefit. Now, some people, after a period of time on total disability, are going to make an attempt to return to work. They may not be able to go back to work 100% of the time. They might make a limited attempt to go back to work. And if they do, that's where we're going to use those partial or residual, depending on their circumstances, definitions of disability that we had talked about a few minutes ago. Now, we don't see this anymore, but older disability policies actually said you can't go straight from total to partial or residual until you've been disabled for a period of time. Older disability policies had built in what was called a qualification period. That is, you had to be totally disabled for a period of, let's say, 90 days before the insurer would allow you to access those partial or residual definitions. We don't see that very much today, but that was once common. And you'll recall that with partial disability, normally we have a 2-year benefit period, whereas with our residual benefit, we'll quite often have a benefit period the same as the benefit period for the policy. Now, let's say that this person has become totally disabled. maybe due to a lower back injury. So they've suffered a lower back injury, their doctor, the insurance company claims examiner agree that this person should be on claim, is now collecting total disability benefits. But after a period of time, this person makes an attempt to return to work. But that attempt to return to work fails. It fails because they re-injure their lower back within 6 months, or because they injure something related to their lower back within 6 months, shoulder, maybe their hips, something related to the lower back. So, what we have now is a recurring disability. And as long as that disability recurs within 6 months, what happens now is we just pick up where we left off. That is, this person's not going to have to go back through that original waiting period or elimination period. They're just going to continue with their claim for that time. Now, the next thing that we have to look at, let's say this person becomes totally disabled. And after a year or two, it's obvious to us that this person is never going back to work. So the person is never going to return to work. The insurance company says, you know what, we don't really like the idea of keeping this person around on the books now. We have a claims examiner who has to look at them every month. They represent a liability that's hard for our accountants to manage. This becomes now an awkward scenario. We'd like to get rid of the person as far as claims go. We'd still like to treat them fairly, but we'd like to get rid of them. So how do we do that? Well, what we do in this case is we calculate out the present value of the disability benefits that would be paid if we continue to pay this person for a prolonged amount of time, and we pay out a lump sum benefit. That won't always happen, but it is fairly common to have this lump sum paid out in instances where somebody has become totally disabled in such a manner that it's likely they will never recover and never go back to work.